It was a bit of a downside surprise for us too. We were closer to consensus, so we were expecting the economy maybe to shrink by somewhere closer to 4.5%. So this is a downside surprise. And I think it really just underlines the extent to which domestic demand in emerging market economies is being affected by the virus and the fact that the virus is not yet contained. So if you look at mobility data, which tracks how people are moving around, especially in places like parks or retail stores, what we would call discretionary travel. It's a journey that maybe people don't need to take, but they'll take it because they want to get outside, they want to spend some money, they want to go shopping. That is worryingly starting to flatten out in places like Indonesia. That started maybe about a month ago. It was improving. It looked like we were past the worst, but we are starting to see some worrying signs. And I think this latest GDP report really just underscores some of those trends.
So can we say that this has something to do with our struggle to contain the spread of the COVID-19 because we hasn't seen the number of cases in Indonesia decreasing or flattening?
Yes, I think that certainly is going to play a very large role because we know that Indonesia's economy over recent years has been driven very much by domestic demand and private consumers. And what we're starting to see very clearly in the data is that households still remain quite wary about going out in public and spending money. Now, that's a big problem for Indonesia, just as it is for many of the economies in the region, because the industries that is hitting most of the service sector industries, restaurants, movie theaters. And what we know is that most of the jobs in Indonesia, about 50% of the jobs are in those service industries. And in other economies, whether it's Malaysia or the Philippines, in Singapore, it's even higher. So this is affecting the service sector first and foremost. That means that people are losing their jobs. They're worried about the virus at the same time. So people are saving more and spending less, and that's resulting in slower growth.